Hey everyone, welcome back to the Mark Loeffler Experience. We got a great show here for you today. I'm going to walk you through my Tesla trade. So it's Wednesday after the close of market at 4:05 p.m. It's going to go out tonight. And I'm going to walk you through, basically, I did a trade on Tesla. I bought it last Monday. I did mention that in the comments that day. And a bunch of people said, yes, we'd like to see what your Tesla trade looks like. We're at about 560 subscribers. So if you haven't subscribed, guys, the goal is to get to 1,000 by the end of July. So I'm going to do some Russian dancing on the channel. So if you haven't, subscribe down below, smash the like button for the YouTube algorithm, and definitely comment down below what you think of this trade, if you would have done something differently or whatnot. All right. So last Monday in the morning, I bought Tesla, ticker symbol TSLA, for 908 and some cents. So we're just going to call it $909 with commissions and all that fun stuff. All right. So I bought it and it was down that day and then it rallied. I don't know what it closed at then, but at the end of trading today, it basically is $960. The end of trading on June 24th. So what I've been doing on this is I've been writing covered calls. So a covered call is basically I'm agreeing to sell the stock at a certain price on a certain day. And people are paying me for the privilege of being able to buy that stock on a certain day. So I did more than 100, but yet I'm going to talk to you about 100 shares because it just makes the math easier for everyone, okay? The first time I sold a covered call was on June the 15th. So that was last Monday at 1 o'clock in the thing. So I sold for that Friday a covered call, so June 06/15 for the 19th, so 06/19 for $1,100. So if on Friday, last Friday, if Tesla was over $1,100, I would have had to sell, basically I had sold all my shares. I had pre-sold them. And for that, I got paid $3.92 per share. So I got paid $392. And so the next day on 06/16, I basically bought those back for $1.88. So for $188, I bought those back. And now you're going to ask, why would I do that? Obviously, Tesla is a very volatile stock. And I'm playing on that volatility. So when it went down, I basically bought back my calls. And when it went up, I sold calls. So that is $2.04. So basically, I made an extra $200. Okay. And then again on June 16th, I went ahead and I sold that same call all over again. So this call, the same thing for the Friday for $1,100, and I sold it for $2.58. So I mentioned it's a volatile stock. So by that time, it had gone up another 70 cents, and I'm like, well, it makes sense to go ahead and do that. I'll collect another $258. And on June 17th, I basically bought that back for $1.08. So I made an extra $140. So it was the 17th, that was a Wednesday. It was kind of getting a little close to Friday. I wasn't getting paid as well on the calls. So I was like, hey, you know what? Why don't I go ahead and sell a call for next Friday? So what I did, I went ahead and I sold on the 18th, 06/18, for $1,100 for this Friday of June 26th. And I got paid $14.50. So $1,450. So I did that around 10 a.m. By 2 p.m., I was able to buy that back for $9. So I made $550 on that thing. And it's around 40%. So if I can make 40% on an option in the matter of a couple hours, I will always take that back. That's kind of what my thinking was on that. Last Friday, I went ahead. So 0619, I went ahead and sold another call. Are you seeing a pattern here? And I sold the same call. I actually sold for $1,050. And for the 26, 0626, and I sold it for $1,390. $1,390. Okay, and I did that around noon on the 19th. I held it all over the weekend, and then on the 22nd, I bought that back for $6.50, which gives us what, $7.40, so $740. What would Mark do? Well, today, I did this yesterday, sorry. On the 23rd, I went ahead and I sold, 0623. We're going to go through this all, finalize the math, okay? So 0623, I sold a $1,010 covered call for $12.88. And I just bought it back today for $2.40. So Tesla had a big down move today. It was hovering around $1,000, and now it's around $960, which we said. So I went ahead and bought that back, and I made $1,048 on it. Keep in mind, I haven't sold any of my stock. So we made $204 on the first covered call. We made another $140 on the next covered call. We made $550 on the next one. We made $740 on the next one, and we made $1,048 on the last one. So that gives us a grand total of $2,682. And that's cash, guys. That's cash I have in the bank. I have no calls on it right now. So $2,682. So let's kind of do the math on this. So it's at $960. So I have a gain of $51 times 100 shares, right? So $5,100. So this is unrealized. And then I have a realized gain of $2,682. So if you guys remember when I talked in with Omar, when we had that 30% per year and 15 minutes a day, this is kind of what we're talking about, right? And now Tesla is a super volatile stock, and the covered calls pay well. So maybe I'm not flipping them out every day yet. I mean, this is kind of why I play some Tesla, because it's not a huge portion of my portfolio yet. I like it because I can get paid well on it. So if nothing else happens, I'm at $7,782. And that's on a investment, so 100 shares of, what's that, 90,900. See, we got to do 7,782 divided by 9,900, and that gives me about 8.6% return on my initial investment. And now, guys, I haven't sold the shares yet. I mean, it's at 960 today. Could it go down to 850 tomorrow? Yeah, probably could. Yet, I kind of have the number in my head where I'll sell some shares and where I won't. But let's just look at realized. So let's do 2682 divided by 90,900. I've realized a 3% return in a week and a half. So let's annualize that. So 3%, I mean, let's even call it 2 weeks. Maybe I don't sell another covered call this week. I mean, it is Wednesday, so I probably will actually, because it's volatile. So if it goes up, I'm probably going to sell a covered call against it. And anything over $1,000, I'm super happy because that gives me a kind of a 10% on the stock, and I'm making obviously money doing the trades. 3% times 26 weeks is a 78% annual return. So this is my Tesla trade. This is what I've been doing with Tesla. This is what I kind of play with. And that's why I love the covered call strategy, is because I can get income. So obviously Tesla doesn't have a dividend. And you know, I love the simple fact that I can get income from this. Now, obviously, what's the risk? Well, Tesla being super volatile, could it be a $1,200 stock when I have an $1,100 call or a $1,000 call against it? 100%. So I'm limiting my upside on that and yet deriving income from it over time. So because of that, I've gotten, so instead of a 5% return on this stock, I'm at 8% now. And it's just, for me, I like that income aspect of it. So guys, let me know what you guys think. Comment down below. Is this a trade like you would like to do, learn about? Should I be sharing more of these? Like, I got some simple ones that I do on like Royal Bank, same thing. I'll buy it, write calls, collect income, collect dividends on those types of things, and bridge that type of thing. So let me know, comment down below. We'll see you guys in the next one.